Hi, everybody. This is Paul Gerard. I'm a student loan consultant working with the American Dental Education Association, ADEA. This repayment module is on refinancing your student loans with a private lender. Now, in theory, private refinancing is similar to federal consolidation in that you are paying off multiple student loans with one new loan. In other words, you're trading debt for debt. But with federal consolidation, remember you're trading multiple federal loans for one brand new federal loan. In the case of private refinancing, you're trading your student loan debt, federal, private, or a combination of both, for a brand new private loan. The main advantage to private refinancing, as you can imagine, is the potential savings you would get by lowering the interest rate on your overall student loan portfolio. We're going to look at that in a little bit more detail on the next few slides. So the main advantage, again, is potential savings in total repayment costs. But the main disadvantage, and this is something to be cautious about, is the loss of repayment flexibility that you have inherent with your federal loans, the access to income-driven repayment plans, in some cases, access to postponement if you need to. So there are advantages and disadvantages to private refinancing. Now, the different lenders who are offering private refinancing, they have their own lending criteria and pricing criteria, but in general, they are all going to look for borrowers with strong credit, a solid employment history and steady income, and a favorable debt to income ratio. So those are the things the lenders will be looking at regarding approval and pricing. If you decide that you want to pursue private refinancing, there are a series of questions we would encourage you to ask of any lender you are looking at as a potential lender for a private refinance loan. And by the way, on the ADEA site, we do have these in much more detail in a PDF that you can download. We'd encourage you to do that and have that PDF handy when you contact potential lenders for refinancing. Obviously, you want to ask about the interest rate. Again, that is really what's going to be driving much of your decision about whether or not to refinance. So we have some questions to ask about interest rates and also capitalization. Capitalization is where the accrued and unpaid interest on your student loan balance is added back to the original amount that you borrowed, and that drives the balance up because now interest is charged on a higher amount. So always ask about interest rates and also capitalization. Let's look at this in a bit more detail. Find out from your lender what kind of rates they're offering in terms of variable, fixed, and in some cases what we call hybrid rates, where they may be variable for a period of time and fixed for a period of time. You will find that variable rates will start lower, but once again, they can change, hence the nature of being a variable rate. A fixed rate will start a bit higher, but will never change. Confirm all that with your potential lender. If you choose a variable rate or you're looking at a variable rate refinance loan, find out how often the rate changes and what triggers a rate change. In other words, what is going to happen that would cause the rate to go up. You certainly want to know if the rate goes up, how much notice you will get about the new payment amount and the impact on your total repayment cost. This is extremely important for someone who's paying with an automatic debit. You don't want your amount being drawn out of your account to go up without some heads up about that. You also want to know if there is a maximum rate that can be charged on your loan with a variable rate and also a minimum rate. Is there a floor to how low they will let the interest rate go? And back to capitalization, you want to know what would trigger capitalization. In other words, what would you have to be doing in order to trigger all the accrued and unpaid interest that you may have on your new refinance loan to be added back to the original amount that you borrowed. So some very important questions to ask about interest rates and capitalization. You certainly want to ask about the repayment options available on your new refinance loan. In general, with private loans, the more you've borrowed, the longer period of time you'll have to repay. We're seeing repayment terms of 7, 10, 15, perhaps 20 years on private refinance loans. That very much depends on the lender offering them. In general, you'll also see lower rates if you select a shorter repayment period. So in that case, refinance loans happen to work very similar to the way that a mortgage would. But remember that if you take a shorter repayment period, even at a lower interest rate, that has impact on your monthly cash flow. your monthly payment's likely to be pretty significant over a shorter period of time. You may get a lot of savings in interest cost and total repayment cost, but once again, your monthly payment could take a hit and be much higher because of the shortened repayment period. Ask about interest-only options. Is there a short period of time where you can pay interest only? And although we expect the answer to this to be no, you might want to ask if there are any repayment options that are tied in some way to your income. Don't expect anything like an income-driven repayment plan, but you might ask to see if there's some kind of similar option that they offer. If you happen to be doing this during residency, which we would caution you to be very careful about, find out if there are any options for repayment where the payment would be much lower during a residency program if you're doing a hospital-based residency and you have the relatively low stipend compared to the amount that you've refinanced. You may also want to ask about postponement options. This is usually not a big deal because usually when you refinance, you're ready to actively start paying on your loans, and it's rare that you would need to postpone. But if you are doing this during residency, there is a chance you might at some point need to postpone payment on the refinance loan, and you want to find out if that's an option, are there any fees to do that, and the impact on capitalization and the length of repayment of your refinance loan. And finally, you may want to ask about cosigner requirements. You may be required to get a cosigner to have the loan approved, but even if it's not required, you may want to ask if you can get a lower interest rate with a cosigner. That's generally the case with a private loan, including a refinance loan. If you get a cosigner, be sure you ask about what's called a cosigner release provision. This is where after a designated period of time, after you've proven that you can make on-time payments and after your debt-to-income ratio becomes favorable and your credit is strong, you can apply with the lender to drop the cosigner from the loan, which is something to certainly consider. It's called a cosigner release provision. And other important considerations, ask about forgiveness in the event of your death or disability. Now with federal loans, the debt is forgiven in the event of your death or disability. That has not always been the case with private loans, and some private lenders still do not offer forgiveness in the event of death or disability. But if you are married, this is something that's very important for you to find out. Some lenders are now offering this provision. Note that this has nothing to do with the forgiveness under the Public Service Loan Forgiveness Program. These are private loans. They do not qualify for forgiveness under the Public Service Loan Forgiveness Program. You may want to also ask if the lender requires you to establish a bank account of some kind with them in order to have your loan approved. That's the case with some of the lenders. And some of the lenders may actually offer what they call unemployment assistance. In other words, some kind of postponement if for some reason you happen to lose your job. So lots of questions to ask as you consider looking at a lender for a refinance loan. So are you a candidate for refinancing? Well, you may be a candidate if your credit's strong and you have a solid employment history with a steady income, you've got a strong debt to income ratio, and folks, you're really ready to enter active, perhaps aggressive repayment on your student loans. You may also be a candidate if you're not concerned about needing to postpone payments and you don't need a repayment plan tied to income. And you also may be a candidate if you're simply not interested in or don't think you'd qualify for forgiveness under the Public Service Loan Forgiveness Program. But if you flip that around, you may not be a candidate for refinancing if you need to be cautious with your payments. You need payments that are tied to income, and that's available again with the income-driven repayment plans on federal loans. You may also not be a candidate for refinancing if you are interested in and trying to qualify for forgiveness under the Public Service Loan Forgiveness Program. And a reminder, we have a separate module on PSLF that we'd encourage you to take a look at. And you may also not be a candidate if you think at some point, especially if you're doing a hospital-based residency program, you may need to postpone payments. You're able to do that with federal loans. In some cases with private loans, postponement options are not available, or you have to pay a fee to postpone. So some very important questions to ask to help you determine, are you a candidate or are you not a candidate for refinancing? We hope the information in this module will help you know whether or not refinancing should be part of your repayment strategy as a dental school graduate. On behalf of the American Dental Education Association, ADEA, best wishes for every success in your dental careers.